on like what career prospects are there in like quantitative finance. So yeah, uh, to begin with, like again, I'll have like a couple of slides on how the quant finance industry is divided. So basically, there are two types of companies in quant finance domain. One is buy side and the other one is sell side. Sell side, we basically mean like banks, investment banks, and retail banks, and all the other types of entities which are more directly involved with customers. And by buy side firms, we mean like prop trading firms or hedge funds or institutional funds who are more like raising capital from HNI people, like high net worth individuals, and then they are using that money to generate returns for their clients. So next we come to the kind of jobs that exist in quant finance. So I have listed down. Uh, okay, one. Yeah. So I have. Yeah, guys, please put yourself on mute. Okay. So I have listed the type of jobs that exist in quant finance. To begin with, there is like derivative pricing and trading role. So in this role, you are basically handle with the task of pricing options and then trading them. So this for option pricing, there are a lot of complex math behind it. Even lots of people do their PhDs on like option pricing. So this is quite a complex role, and usually it's not available for bachelors or sometimes even masters. Then there is the risk management role. This is probably the most common type of role that exists in financial industry. Um, Basically, this role involves like a calculation of different thresholds and different metrics to make sure that the trading organization or the whatever lending organization is in compliance with the laws of the nation or whatever continent at times. Um, yeah, and the risk management role is like a semi-technical kind of role, which involves usually it involves working in like Excel or Google Sheets, and then a bit of formula development, and then yeah, sometimes a bit of programming, and also a bit of like client facing or sometimes talking to your customers.
Sorry, people are saying that voice is very low. Can you check with that?
Hello. Yeah. Can you hear me now?
Yeah, it's better. And can you also present the put it on present mode, the PPT?
Okay.
I think the voice is better now.
Yeah.
You can go ahead. Yeah.
Yeah. I've been interested. Yeah. So I was talking about risk management. So risk management roles basically involve like working in Excel and Google Sheets. And the day-to-day jobs are basically like calculation of VAR, like value at risk, or calculation of expected shortfall or probability of default and all these things. So um, this is like the most usual role that exists in literally every financial organization, like whether it's trading or lending or some other investment purpose that it is in. Then there are like structured products, which is more like it's I guess somewhat a more management oriented role, like for MBA guys, which are and this role involves like yeah, structuring different maybe insurance or whatever home loan or some other products that the organization is offering. Then there is a portfolio management role. So this is a role which is available usually for senior people like a few years experience. And this role involves like taking care of the portfolio, like whatever lending, buying, or whatever shares or whatever activities happening, taking care of that. Then there is the quantitative research role. This is usually the role that is given to freshers. Quantitative research role basically involves like yeah, it involves a lot of research, like research on the data in Python, and then using machine learning techniques, a lot of data analysis, hypothesis building for testing, and then also involves at times like deploying the trading strategy into live market. Then there is strategy analysis and modeling. So this is also like a semi-technical role, which is like sometimes it's like yeah, some banks have like strategy roles to guide them into new directions. Or and one example of this would be like credit card sales strategies. So how they can increase their credit card sales, or which type of customer they have to target. So all this comes under this role. Then there is technical consulting, like basically working as a consultant for banks. As the name suggests, it's also a technical role, like which could involve programming and but it's not necessarily related to trading. It could be some other activity as well. Then credit reporting and analytics. So yeah, this is also an analytics role, like which involves like a bit of risk work is there, and then credit score and yeah, day-to-day business analytics. So this is a broad division of most of the roles that exist in the quant finance domain, but sometimes the names can be misleading because you may have one type of name, and then you may be working and doing some different role. Like in my personal experience, also I've been given title of a manager and I've worked as a quantitative analyst. So these things can happen. Uh, okay. So now I'll get started with today's workshop. Um, so basically, uh, um, so
So
this
Sai,
workshop is a,
we had launched
yeah.
a poll, so I'll just share the results with you.
Okay, sure.
Yeah. So as you had asked, like you wanted to know the distribution of the people who are attending.
Okay, okay. Okay. That sounds good.
Yeah. Are you able to see it?
Yeah, I saw it. Like final year students are the maximum, and then there are working professionals and all.
Okay. Okay. Great.
Yeah.
So, do you want to launch the other one right now? Just let me know when you want to ask the second question.
Yeah. You can launch the other one. Like, I want to know how many of you have ever used Python or know even a bit of Python. So you can launch. Yeah. So in the meantime, I'll get started a bit with the basics of the strategy. So this strategy is a moving average strategy, moving average crossover. Sometimes it's called. So basically, like the most observable quantity in trading world is the price. What price stock is trading at, what price you will buy or what price you will sell. So yeah, so the way this strategy works is there are two windows. One is a short window and one is a long window. The significance is that in, let's say, the short window is like something over 10 days and the long window is something over 50 days. Okay, so this is basically to get a trend, like how has the price of a certain instrument behaved over a certain period of time. So long window, what that would imply is basically how the market has been over a period of time, over a long period of time. So as you guys might be aware that the stock market has pretty much crashed since coronavirus outbreak. So if you look at the long window right now, I'm sure it will be bearish. By bearish, it means that the market is like going down, and then yeah, there is no upward movement. Whereas by bullish, we mean the market is going up. There is an upward movement in the market. So long window basically right now in Indian market will tell you that the market is bearish. And this is like calculated over a longer period of time. And the short window is basically something which is calculated over a short period of time. And if you check the short window for Indian market right now, it will be bullish because in the last 1 month or 2 3 weeks, the market has actually recovered from a bit from the crash. So yeah, so these are two indicators you can say which kind of give you an idea about which direction the market or the instrument is progressing. Uh, the difference between these two windows, the difference between the value of these two windows is called spread. Spread is a pretty common term in the finance in the trading world, which basically signifies the difference between two things. Like it could be, yeah, in this case, it's the difference between the two values of two windows. Uh, okay. Then there are like positions you can take. So you can go long or you can go short. Long means that you are basically buying the instrument, buying, let's say, the stock, and short means you are selling the stock. So there is a question that comes here, like how do you sell something that you don't own? I will let you guys think on it. Uh, then the other next aspect is the PNL of the strategy, which is profit and loss. Okay, so now I'll go into the strategy and share my code to get an idea of how I went about building this strategy. Okay, so it's encouraging that there are quite a number of people who have used Python before. So I guess you will understand quite a big portion of my script. Okay. So yeah. So now I'm starting with explaining the code. So this setup that you guys can see on my screen right now is basically Jupyter Notebook. This is the most widely used application for data science purposes, for quant trading purposes, and it is very handy and very useful. Uh, so all of you guys should familiarize yourself with this platform before you even try to look for a role in quant finance industry. So these are the libraries that what I can suggest is you guys can to begin with you guys can maybe type some of portion of my code just to check for yourselves as well, or most likely I will share the notebook at the end of this session, so you guys can go ahead and yeah, like do your personal tests and experiments with it, and also try to explore in other directions. So the first cell, what I've written are basically called libraries. So the first library is NumPy, and yeah, so in pandas like in sorry in Python, to import a library you use import NumPy as NP. To import NumPy library, you use import NumPy as NP. So NP is just an acronym for NumPy. Then the next library is Pandas Data Reader. So Pandas Data Reader is basically an open source library which basically fetches data. This is like an API provider. This is an API which provides you data from Yahoo Finance. So you can use this library to get price of instruments. So I will give you a demo of how you can get the price. So I have imported Pandas data reader uh, as PDR. So I will use yeah. So let's say I want to get the price of Microsoft for the last 1 month. So I will write a single line of code like this 0701 and yeah. So this is the data. This is the price of Microsoft over the last uh, 1 month, you can say. So yeah. So to run a cell in Jupyter, so there are few basic. Before I discuss this Pandas data reader, there are a few basic operations in Jupyter Notebook. So to run a cell, basically you use Control Enter or Shift Enter. So let's say I wrote the code and then I want to run this cell to get the data. Then I press Control Enter. So this gives me the output, the data. And so we can see six columns against each date. So the columns are high, low, open, close, volume, and ad, ad, adjusted close. High is basically the highest price that was uh, the at which the stock was trading on that date. Low is the lowest price. Open is the price at the start of the day. So usually, like Indian market starts at 9:15. So this is the price that for any instrument at the start of the day. Then there is close, which is the price at the end of the day, and volume is the volume traded on that day, like how many yeah, quantities of uh, stocks are traded on that date, and then there is adjusted flows. So adjusted flows is basically uh, so what happens like there are different corporate actions that a company takes. Like sometimes they decide to let's say a company has like 100 shares in the market, then it decides that it will split its shares in the ratio 1:2, which means that every stock will then get divided into two stocks. So there will be 200 stocks. Similarly, this is called split. Then there is like merger, buyback, and yeah, bonus share and many things. So in every kind of corporate action, the price of the share gets changed drastically. Like for example, if there is a split in the market, a split in the price in the company, like in the share of the company, then let's say like the stock was trading at $50 before split. Then when it gets splitted in the ratio 1:2, the stock will be trading at 25. So this adjusted column basically takes care of that. It makes sure that whatever actions were there, corporate actions were done in the past, they are taken care of, and the price is like uniform, and there are no random jumps because of corporate action. So I have used this column like adjusted close for my uh, strategy. Okay, so now we'll go back to the libraries. Pandas data reader I've just shown. Then there is matplotlib. This library is basically for plotting purposes. Uh, then comes the most important library in the world of data science, analytics, quant finance, which is Pandas. So Pandas is basically a library which, yeah, basically, so Pandas has this data structure called data frame. It's more or less like an Excel matrix, like M by N row column thing, where there are multiple columns and then multiple rows, and then the values are filled. It's basically like a tabular thing. And this library gives a lot of methods, like a lot of functions, which can be used for for doing all the analytics tasks. Then there are some other libraries like yeah this these libraries are not that widely used. It's basically like warnings is basically to filter warnings. Like sometimes there are some version changes or some kind of warning that pandas gives you. It's basically to ignore them. Um, and future import division is basically some division related thing, like usually some version of Python. Like if you ask them to calculate 2 by 4 for you, they may give you 0 because they are both ints. Then you have to give 2 by 4.0 to get the right value. So yeah, so this is basically to take care of some float issues. Yeah. Then the next cell in the next cell I've written my function,
So
which
Sayantam,
is the
there's
move.
one doubt that
Yeah.
the data you got, like, can people get minute by minute their data from Yahoo?
No, minute by minute data is not available from Yahoo. There may be some other source, but Yahoo is not giving minute by minute data.
So the
Basically, it's
the
like
data you got was day by day.
yeah, yeah, daily data. Yeah, minute by minute data is usually like not available for free. Like there may be some sources that may give for like a limited period of time, but usually they have to be bought if you want for a longer period of time.
Okay.
Okay.
So there's another doubt by Anirudh
Yeah.
saying that he's getting an error saying no module named Pandas data reader.
Okay. So yeah, these libraries are not pre-installed like in. Yeah, that's a very good doubt actually. These libraries don't come pre-installed in Jupyter. So basically, you have to install them. If you want to install them from here, like from Jupyter Notebook, then you have to write this line of code. Pip3 install pandas data reader. Yeah. So if you guys write this thing, then you can get it installed. Since it's already installed for me, so I'm not doing it again. But you can use this line of code. Uh, Yeah, so if there is some data provider that provides minute by minute data, then that's great. But usually, like they may not provide for the entire time period. It may be limited usually because there are actually, I mean, these are actually data sourcing companies that store data and then they sell it for applications. Okay. So I will go ahead. So I hope those who were facing problem with installation of the library, they managed to uh, get it done. So yeah, like so yeah, this is how a function in Python looks like. Usually, a function in Python, like it starts with def, then it's like function name, then parameters, yeah, and then usually there is a return thing, like return some value or something, or sometimes it can also be just return when the function is not supposed to return anything. So this is usually how a function looks in Python. So yeah, so I'll get started with what my function contains. So the first parameter is data. Then there is a spread cutoff, like as I mentioned in my presentation, there is a spread which is the difference between the windows. Then there is a short window, uh, and then there is a long window, which is basically the number of days over which the price is calculated. So yeah, so I am so my data I've already displayed. Okay, let me just show it again. So this is the kind of data that I'm passing in. Then I'm calculating short moving average. The short moving average, yeah. So I take this column adjacent close, sorry, adjusted close, and then I calculated the rolling mean. So rolling is a function, like a method that pandas provides. It basically calculates the uh, uh, mean, like so different quantities can be calculated. It basically calculates some quantity over a rolling window. So let's say, like, for example, I put high, and then I just yeah. So let's say I want to calculate the moving price over a 3-day period. So yeah, this is how it will look like. So what it is basically like calculating the mean price over 3-day period, like, oh, and it's constantly moving. So this value is basically the rolling mean of this day, 3 days, and then the next value for the previous 3 days. So it keeps on moving like this, and this is the rolling mean for 15, 16, 17. So this is how it is calculated. This is the short moving average value, and this is the long moving average. Then the next line, I have calculated the spread between them, like the short moving average and the long moving average. Then here comes the logic that whenever np dot where is basically to something that says that if the value of one column is equal to or above some value, then I put this value for in another column. So what it does is basically I am checking where my moving average spread is above my spread cutoff. And if it is above my spread cutoff, I take a long position and I denote it by one. Otherwise, it's zero. And then again, I check for if it's less than my spread cutoff. And if it is so, then I put -1, which denotes the short position. Or otherwise, I retain the original position. So this way I've assigned a long position whenever my spread is above the cutoff, and whenever my spread is below the cutoff, I assign a short position. So this is how I've taken my position. Then comes the next part, market returns. Like so, this line basically calculates the daily returns, which is basically like, let's say today I've invested like the stock price was $100, and tomorrow it is $110. Then the return will be 10%. So this is what I've calculated here. Like yeah, and this shift basically shifts down the column by one row. So basically, I've divided today's close by yesterday's close, and then I've calculated the percentage change in it. There are some also other inbuilt functions like PCT change and all to do the same thing, but I prefer to do this way. Uh,
Sayantam, there is
then,
a doubt
yeah,
by Chandan about moving price. Like, can you define what is moving price?
yeah, moving price. As I mentioned, it's basically like the average price over. Let's say the we are calculating moving price over 5 days. So basically, it's like the average price, like the rolling price over the last 5 days. So let's say I want to calculate. Here I've calculated over. Or let me put it five. Okay. Yeah. So yeah, this price 208.91 is basically the mean of all the prices for up till this date, like 7th of July. And this 210 is basically the mean price till 8th of July. And this is like the mean price for the last 5 days till 9th of July. So what this basically tells you, it's like it basically gives you an idea about the trend over the last 5 days, like how the price has been moving. So I hope it is clear.
Yeah. And how do you calculate spread cutoff, M average spread cutoff?
No, so these are basically parameters which I'm passing to my function. So in the next cell, I have written how I'm passing them. So yeah, I discussed up to market return. Then comes the next portion, P&L. In terms of return. So what I did is like I just multiplied the market returns by my position, whatever position I had that day. So basically, this gives me like if I was long, like how much I made, or if I was short, how much I lost, or how much I made something. It gives me like this, like basically the daily returns uh, on my invested money. And then yeah, so this strategy equity basically gives me like the PNL at the end of the trade, like at the end of the period of time. So let's say I was calculating this for like a 1 year period. Then at the end of the period, like how much was my PNL in terms of return? This is calculated using sum, which is basically like cumulative sum. So it's calculating all the returns. It's summing up all the returns and then it's adding one. Uh, yeah. So then I calculate in this portion I calculate Sharpe ratio, which is basically so Sharpe ratio is a pretty important metric in the world of trading. Uh, yeah. So Sharpe ratio basically means that it's something like a returns to risk ratio. So it basically means like the mean of PNL, like the mean PN profit over like the technical definition is mean profit over the usual returns, like over the safe returns divided by the standard deviation of the mean PNL over safe returns. So safe returns is basically something like how much you would get if you like if you, for example, in India, if you put your money in a bank, usually they give you like 3.5% to 4%. So this is a safe return, which is like guaranteed to you without taking any risk. So yeah, so we for to calculate Sharpe ratio, we basically uh, like calculate the mean PNL after removing this safe return and divide by STD of the same. But usually for day-to-day trading purposes, this safe ratio, this safe percentage is removed, the safe returns portion is removed, and we just calculate the mean PNL and standard deviation of the same. Uh, so here it is like I've calculated the mean PNL and the mean STD, and then I've divided, and this is my Sharpe ratio. And then so this is the Sharpe ratio, and then I've annualized it, which means like what will be the annualized Sharpe ratio like over the whole year. To annualize it, we multiply it by square root of 252, which is usually the number of trading days in a calendar year. So here I've calculated my Sharpe ratio, and then at the end of this function, I'm returning like the PNL, like my final PNL in returns, like, and then the market returns, like how much the market would have given me over this period of time, the Sharpe ratio, and then I'm also returning the data. Okay, so this is my function. In the next cell, I've written how I call this function and what parameters I've decided. So for the short window, I have decided all this dates. So I'm just showing you, yeah. I've decided different, like I'll take 5, 10, 15, 20. These are the number of days. So my code will be running for combination of all of this, like and this np dot linspace is basically for creating an array. 5 is the starting value, 60 is the final values, and 12 is the number of values that I wish to have. And d type is basically in which format it should return. So these are int values, like integer values. Uh, yeah. So yeah, these are the parameters for short window array. And similarly, these are the parameters for long window array. It starts from 200 and it ends at 270. So you are free to choose whatever value you want. For the purpose of demonstration, I limited myself to this range. And then here is the moving average spread cutoff array, which Jarin was talking about. So I have decided like to give values between -2 to 5. Uh, and yeah, there would be like 8 values between them. So, okay. So then I've created this data frame like, to store whatever value I'll get. So this data frame will have columns like short window, long window, moving average, spread cutoff, the PNL, Sharpe ratio, and market returns. And here I have called the library pandas data reader and created my training and test data. So yeah, in the world of analytics and data science, these are two pretty common terminologies: training data and test data. Training data basically means data over which your model or whatever strategy will learn the parameters. And test data is like the data over which I will test my strategy. So test data is basically unseen data, like the model would have never seen this data before until I ask the model to run on this data and give me the desired values. So I'm taking Apple stock, and the train period is from 2nd of January 2012 till 1st of January 2015, and test is from 2015 2nd January to yeah 1st January 2018. So it's like 3-year periods in both train and test. Then I have this for loops running over the short window array, long window array, and moving average spread cutoff array. And here I call my previous function MA strategy, and I'm passing these values. Uh, training data, spread, long window and short window, and I'm storing the values that the function returns in PNL, market returns, sharp, and then yeah, the data I'm ignoring. So in Python, if you want to ignore data, then you just put an underscore or you put whatever symbol you want, but we are basically not going to use it. Um, yeah, and then I store the values in this data frame result df. So I have this parameters which I was passing, and then the PNL, sharp, and market return. I have written it in a list basically, and then yeah, I'm just storing it in the data frame in a row. So once this loop runs, like, so now this three for loops, they will run over the combination of all these three parameter arrays that we have decided, and then it will yeah, it will make this data frame which will contain all the values. Yeah, so once this runs, then I sort the data frame by Sharp ratio. So as I discussed before, Sharp ratio is basically the mean of PNL divided by the SPD of PNL. So yeah, you guys can think why I have sorted it by Sharp in ascending order. Basically, the idea in trading world is to have as much high Sharp as possible, because that gives you more confidence in your strategy. Uh, yeah. So once I have sorted it by Sharp, then I am just printing whatever parameters I got as my highest, with whatever parameters I got my highest star. Yeah, using this line. In Python, print is used like 3.7. In Python 3.7, print is used with the parent first bracket or whatever parenthesis it's called. And point percentage point two f implies float values. So this line was printed once it runs. Then I have assigned like, so I basically, after sorting the result by the highest sharp, I basically take the parameters like for long window, short window, and moving average, spread cutoff, and then I assign them to this variable for running on my test data. Uh, yeah, so here I run it on my test data, uh, and then I again, yeah, I get PNL, market return, sharp. Yeah, and then here I have printed them. So now yeah, at the end I would like to see how my how these parameters would have performed over the entire period. So here I have put collated both the data and put in overall data, and then yeah, then I run this strategy over overall data, and then I figure out how it would have looked. So yeah, so let's run it once. So this will probably take a few seconds. Yeah.
Sayantam, couple of doubts I can see
Yeah.
from people. Like one is
Yeah.
they want to know the meaning of, one person wants to know the meaning of position and like short and long window. What is a short and long window?
So yeah, position basically means like yeah, position basically means like whether you have taken yeah, basically it's like buying and selling. When you go for a long position, you basically buy a stock, and when you go for a short position, you basically sell a stock. Uh, that's pretty much. It's like you think of a shop. One is buying and one is selling. So basically, that's what a position means. Here I've denoted long by one and short by -1. And long window, short window, I had already covered. Basically, these are like two moving windows, like a longer window is over a long period of time, and shorter window is basically over a short period of time, and then we are calculating our yeah, variable of interest over this period of time. Yeah. So, and yeah, short window gives you that trend over a short period of time, and long window will give you the trend over a long period of time. So we have our results. So this is how it looks like. Like, so my train market return is 79%, 79.27%. My train PNL is like 90.24. Train Sharp is 1.37. And these are my optimal parameters. So I have found like 35, uh, a short window of 35, a long window of 20, 220 days, and a spread cutoff of 2 as my optimal parameters for running my idea strategy. And these are the test market returns. Like, so the return is 57%, the test PNL is 51%, and the Sharp ratio over test data is 0.97. Yeah.
There is one question: if it's a good idea to short when the market is going bearish.
Yeah, so that's what actually the basic idea behind this strategy is, that only. So basically, as I mentioned, there are two windows, one long window and short window. Whenever the short window is like a significant value above the long window, we go for a long position. And whenever the short window is like a significant value below the long window, we go for a short position. The short window basically is like it gives a temporary trend, like the trend over the last few days, and long window is basically the trend over a longer period of time. So that's what the strategy is actually doing. Yeah, and this is how my PNL, like cumulative PNL, looks over the entire period. So we can see that over during some portion of the uh, time range, my PNL, the strategy performed better than the market returns, which is like the stock returns. And some portion it did not perform well. Eventually, it more or less merged. Yeah. So this is how I built my strategy, and then I ran it, and then I calculated the optimal parameters, and yeah, then ran it for yeah, the test data. In the next portion, I will be doing some analysis of the results. Uh, so to so this is how the strategy. This is the kind data set that I got from the function for the optimal set of parameters. And now we are calculating different metrics to test how good this strategy was. So the first thing I calculate is win days, like basically the number of days when I had a positive PNL, like I made a profit. For this, I have cut off like PNL should be more than zero. Then I am making a profit. The number of loss days is when I made a had a PNL less than zero. And then yeah, so then I print this values, number of win days and number of loss days. Then I calculate annualized return, and then I calculate mean daily PNL. Yeah, the sharp and all this. Mean daily PNL standard deviation. Yeah, and then comes one of the most important uh, metric to test a strategy, which is drawdown. So drawdown basically means like, let's say you are deploying a strategy and it has made some money, but it will not always keep on making money. There will be days when you will also suffer losses. So drawdown basically means what is the maximum loss you have suffered from the peak position. So let's say there is a strategy like you start with 100 rupees. At your peak, you made 150 rupees, and then after 150 rupees, it started to fall, and then it reached 75 rupees, and then it finally ended up with 90 rupees. So your drawdown will basically be like 150 till 75. This percentage drop is your drawdown, which is basically 50% in the example I mentioned. So this is called drawdown. The idea is always to have as much less drawdown as possible because you don't want to be losing money. So so then here is the code for that. So basically, I have calculated the sum PNL. I've made a defined a drawdown array, and then I have a dummy value in peak. Then I start iterating over this PNL, and then like if the peak value is more than the PNL till that date, then I calculate the difference between them, like the peak value minus PNL sum array divided by peak. Yeah. Otherwise, it's zero, and the peak is given by this. So what this function basically does is uh, basically let's say your PNL till today was 110, and then tomorrow your PNL is 120. So then what you do is, and your previous peak value was 110. So you have a new peak today. So basically it is assigning the new peak to this peak variable. And then for that day, for today's date, you have no drawdown. And if your PNL starts dropping, then it will always be less than the peak. In that case, you calculate the difference in PNL for today. So the maximum value of this difference is my drawdown. So these are the values I have gotten. Like I had 676 winning days and around 610 losing days. This yeah, and my annualized returns is 127%, and my daily PNL is this, and my STD is this, and my drawdown for this strategy was 57%. So this basically means that whenever the peak was reached, from there my PNL dropped by 57%. So with this, we basically reached the end of today's workshop. Uh, so I can take a few more queries now.
So, what is the ideal Sharpe ratio? That is one question. And what is a Sharpe ratio less than 175?
So uh, basically, you want as high Sharpe ratio as possible, right? So a higher Sharpe ratio basically means that you are getting more returns for the risk you are taking. So ideal Sharpe ratio, there it depends on the horizon of strategy actually, whether it's a medium frequency, a high frequency, or a short frequency, or a low frequency strategy. Like it can be double digit at times, it can be 4, 5, it can be 2. It just depends on how much risk you are willing to take for the returns you're getting. So as such, a Sharpe ratio below 1 does not signify anything. Yeah, um, I mean, it just depends on your investor on whether you are convinced to invest in this strategy or not. There is nothing that one specific value is signifying. And it also, as I mentioned, it also depends on the horizon of strategy. For some strategies, it can be very high. For some, it can be very low. Uh, yeah, and so uh, yeah, you can have Indian stocks also in Panda's data reader. You can check. Basically, you need to put instead of Apple, you will have to put something else. What you need to put, you can check up online. Uh, yeah.
Can you explain alpha and beta ratios?
What does alpha? What is alpha and beta? I guess you are. I don't know what exactly you are trying to mean, but I guess you are trying to mean something like how much stock will move on the basis of index. Uh, I guess that is what beta usually means. Like, uh, yeah, like basically, what I think it's basically like, yeah, like if let's say Nifty IT is moving by a certain value, how much will Infosys move? Something like that, maybe. From yeah, from where I can read about this models, you can read online. You can just search on Google for this. If I'm implementing, say, Piotrowski F score strategy, so I actually am not aware of this strategy, so I don't know about this. What we learn from it and what is the use of it after writing all this code? Yeah, that's a funny question. Basically, use of this is basically it was a workshop, and I showed you what are the different aspects of a automated trading setup, how you test the strategy, what is how you train the model, how you check whether the model is doing well on test data or not, what are the different parameters on which you yeah, uh, on which to test, like how do you decide, like if I have to present this strategy to someone and ask him for money, then he would wish to know like what value, what is my sharp, what is my PNL, what is my drawdown. So this is the use of this. Yeah, I have already explained the trading strategy actually. I guess you missed it, but I had covered it in my slides. How can we connect to an exchange and deploy this strategy? Yeah, you can use different APIs like in India, Zerodha, the biggest broker, has Skype Connect API, so you can use such an API and then you can deploy it using their yeah, whatever guidelines they have. Is daily data good for modeling or more detailed one like minute by minute data? So that totally depends on what kind of strategy or what kind of idea you have. There is like it depends like a different horizon. It's a matter of horizon. It's a matter of what idea you have. It's a matter of like what aspect. What is your fundamental belief? What is driving the market and which quantities would change over a short period of time? Which quantity would change over a longer period of time? So it all depends on this. To be honest, there is like not just minute by minute, it can be microsecond by microsecond data as well. So all this data is called snapshot data because it gives you a snapshot over a certain period of time, interval of time. And the other format of data is tick by tick data, where you get every tick, like every single event that happens in the market, you get a tick for that, whether it's a buy or whether it's a sell or some modification, some new order, anything and everything. So that kind of data is called tick by tick data. Can you mention any courses online for better understanding of algorithmic trading? Well, there are many courses, I guess. Like I have personally not uh, done any specific algorithmic trading courses. I have learned over my course over, like at my job. And yeah, to be like, I would also like to let you know that from next week or maybe in a week or two, I am going to start a course called Introduction to Quantitative Finance, where I'll be teaching like basic statistics, basic, and then different financial products and yeah, some machine learning techniques. And we'll also be working on a quant research, quantitative research assignment, a project to understand better how market moves and what aspects you should observe. Yeah, so you are very much welcome to attend that course. What level of financial knowledge like trading techniques are actually required for making these models actually in industry? Like, mm, that's a very open question. Like, yeah, you do have to be good, but how good? I don't know. Like, there are people like 1 2 years experienced guys who are also making such models, and there are like people who have built their entire careers like 20 30 years uh, making such models. So it's a huge yeah range actually. Yeah. Is there
So,
any other
so
question
one
or?
thing, maybe another question I saw on YouTube was, can you repeat the
Yeah.
strategy that you implemented?
Oh, so yeah. While again, today's strategy, right?
Yes, yes.
Yeah. So basically, the idea was basically to at the depth level. Basically, I had two indicators. One was a short indicator, like short window indicator. The other one was a longer window indicator. The shorter window indicator basically gave me an idea about how the price was changing in that instrument over a short period of time. The longer one basically gave me an idea about how the price was changing over long period of time. Uh, yeah, so basically this is sort of like a momentum strategy. Like whenever it basically means something like a break off. Like there was let's say for 200 days there was like a downward trend, like a bearish move in the market, and then all of a sudden things change and the stock started to move up. The short window actually tells me about that. The long window tells me about the trend over the longer period of time. So the idea behind this strategy was that whenever the shorter window was like a certain value above or below the longer window, we took a long or short position accordingly. So the basic idea behind such a strategy is like to understand what is the trend in the market, like whether the price is going up or down, and if there is a sudden change in the market, like let's say in the last 5 days, 10 days, how can we detect such a change and how can we use that detection to build a strategy? So this is like the fundamental idea behind today's strategy. Yeah.
So, are there any
So
other like common strategies or like things that you can talk about?
yeah, so there are like this is two indicator. You can the students can further go ahead and make modifications to this strategy. They can change the way the long and short windows are calculated. They can use something like exponential moving average or RSI or different crossovers, Bollinger Band. So there are different indicators to check trends in the market, and some of them may work, some of them may not work. So it's up to the student. Also in the real world, actually, the what works today may not work tomorrow. So no trading strategy lasts forever. They always have a lifetime, and after that they stop making money. So these things also happen. Yeah.
Okay, there's one more
So
question.
can you mention, yeah, any company which recruits in finance background? So there are lots of companies, all banks, all hedge funds, all algorithmic trading companies. They all recruit in finance background. And how is the career in finance? I have already discussed this. I guess this is also being recorded and it will be available on YouTube, so you can yeah, watch it from the beginning. I have discussed the different kind of roles that exist in financial industry, specifically fund finance industry, and how and what are the expectations in such roles. So I would suggest you to watch this video from the start again. Yeah.
So we have another.
So yeah,
So how is it
there
like?
were some questions. Yeah.
Yeah, it's about like current situation in the finance industry. Like, is it
How
affecting?
is how is the current?
How is the current job, like the job market in the finance industry?
I think like I have personally like so current. Yeah, it's not the worst affected industry. I would say it's not as bad as let's say travel industry or entertainment industry or aviation industry where there are no jobs literally and no new hires probably. Finance industry is still quite good. I think lots of organizations are still hiring. And as far as trading is concerned, this is something that goes on like whether the market is going up or down. There are organizations which have made huge money out of this crash, and also there'll be organizations which have gone bankrupt. So this is an ever-changing industry, and it depends on what kind of ideas you believe in, what kind of strategies you are running in, that decide how you will be in the longer run. Yeah. Is there any other question?
Should we learn technical and fundamental analysis before starting to code?
I think both of them go together only. You start with Python, then you pick up some, you think of some ideas, or yeah, you search for some pre-existing ideas, and then you try to implement them in Python. So they are going hand in hand. Yeah.
And so when somebody works as a quant researcher or any of these roles, like
Sorry. Yeah.
so
I,
is this like something that they would do, like the strategy that you showed, or it could be even more complicated strategy, but is this the work of a quant researcher?
yeah, this is pretty much the work of a quant researcher. Of course, real world strategies, they are quite complex. People spend months and months on one idea. They try to uh, guide that idea in different directions and try to come up with some yeah useful information out of it. They are pretty complex. This was just to give an idea about how a strategy, how to build a strategy, how to backtest it, and then how to yeah, see how that strategy is doing on unseen data, and then what are the metrics on which you can test the strategy. So this was just a short glimpse of how things work in real world. And yeah, this is, I mean, whatever I showed today is how pretty much how a quant researcher works. Of course, it will be more complicated. There will be machine learning algorithms. At times, you may have to read papers, and there are different aspects are involved. But to begin with, this is like a good glimpse of it.
Any other
Yeah.
roles who work like this using Python and strategies, like any other roles that you mentioned previously?
I mean, other than this, there are like data science roles, data scientist roles, uh, both in financial and non-financial world. There are like fraud risk detection roles. Uh, yeah, then there are some probably some data science roles in the risk industry as well. So yeah, all of this. But yeah, all of this can also be considered as quant researchers. Sometimes companies may hire you as quant researchers, and then they may put you in fraud risk division or yeah risk division. So yeah, it just depends on the company as well. Especially as freshers, you can't always be like looking for a specific role. I guess it depends on the company a lot. How can I look for the model strategy that are more complex, which is currently used in industry, from where I can get these resources? Yeah, that's a very good question. Basically, the complex strategies that are working in industry, if they are available in the market, they would make money. So basically, you will not get any complex strategy that is available that companies are using for making money. Because if they put it out, they lose their profit. So yeah, you can just start with some ideas. Like you can check out what ideas are existing. You can test them, and then you have to join a company, or you can start building on your own ideas. You can talk to senior people who are working in the industry to guide you. So yeah, that's how it is. Do buy side analysts also use this kind of models of strategies? Yeah, like all hedge funds, most hedge funds and most algorithmic trading institutions, they are always using some sort of quant research ideas, quant models to, yeah, to make money.
Hello.
Uh,
Hello, sir.
yeah,
Actually,
yeah.
this is
Hi.
Shailendra. Actually, I have interest in this field. From last 3-4 months, I was reading about these strategies like F score, G score, and like lots of research papers I have read. And like I was currently learning Python to like implement those strategies. But the
Yeah.
so like I just got the notification that you are having some live project with you, but like I'm really interested into it. But the issue is like currently I'm going through some internship. So like, is it possible I can start working with you, or it can be delayed for 15 to 20 days or something? Like I am really interested into
So
this.
so basically, like this live project is as part of the course that I'm going to conduct. So you can join the course, and then we can talk about how you can join or when you can start.
Oh,
So yeah, I would actually suggest you to talk to Jerin once, and then we can consider it.
okay, okay, no issues.
Yeah.
So there are so Sayantam is starting one batch next weekend, and then one in August, like mid of August. So if
Okay, okay.
you're available next weekend, you can start, or like later you can start. So I think Sayantam, like how much time commitment is required from the applicants?
So um like the course. I mean, the class lecture will be for 2 hours every week, and then I'm giving some additional time to discuss your ideas and discuss whatever problems you're facing. Um, and yeah, that course will actually be more hands-on. Like here, because of large number of people, we could not have a one-to-one discussion. But in the course, it will be possible to have a one-to-one discussion. You can discuss your ideas, or I can even provide you some guidance on how to go ahead with the ideas. So that will be pretty good. In addition, the project will be more of a quant research project where we will try to understand like what drives prices in instruments, like what drives prices of, let's say, Infosys, and how do you use that information later on. So this is how the live this is what the live project like the assignment will be about. Most likely I will start the assignment, like I will give idea about the assignment in the first week itself, and then we'll have regular monitoring, and then we'll see how it goes. It can be open ended as well. I have some idea in mind, and then we'll see how it goes.
So one question is, what are the prerequisites to get into finance career? How much is the average pay in this? I think it varies, right?
Yeah. Average pay can be anywhere between 5 lakhs to 20 lakhs. That depends on what kind of skills you possess. And prerequisites, yeah, it's basically statistics, math, some basic knowledge of finance, programming, all these things. You can also join my course to have an idea about what exactly you need to know. Scholarships, I don't know what scholarships are available actually.
So we mentioned that. So once you have applied, like we'll talk to you and like evaluate based on your profile. So if you have filled the form, sign them and Sayantam will talk to you and discuss further.
Yeah. So is there any other question?
I think that's it, Sayantam. So,
Yeah.
so
So
rapid.
someone had some issues with keep installation. I hope it is sorted. If not, you can just check online. Like I'm quite sure you'll find step-by-step instruction for installing uh, Python or whatever library you want. Yeah. Indian stock it's available uh, on Pandas data reader 252. 252 is not an approximation for number of trading. I mean, it's pretty much an approximation. It could be like 250, it could be 255, but yeah, it will not change the Sharpe ratio much. An ideal Sharpe ratio, the higher you get, the better it is, in one word. Yeah, so I am going to share this notebook with you. So with everyone who has signed up for the session, you guys can go ahead and then play with it and do whatever you want. I hope there is no mistake in this, but if there is, you can always let me know. But the idea was always to, I mean, my idea while demonstrating this strategy was not to show how much PNL it makes or whether it's profitable or not. My idea was to break down the development of a strategy into different segments, right from having some notion about how you can detect change in the price, what sort of how you can go about it, how to write the function for it, how to backtest it, then how to use the backtested parameters for running it on uh, trained data, then how to evaluate the strategy. This was my idea, and this is the flow I believe one should have in mind while developing a strategy. As far as PNL is concerned, this may or may not be right. Right. You can always evaluate it at your end. Yeah. So, Jarin, is there any other question or anyone with any other question?
I think that's it. We'll share the notebook with everyone who have signed up on mail.
Yeah.